To have our next guest for Mortgage Stories, Tom Couture of Texas Tech Credit Union. He's got an awesome story to tell. You're in your 50th year. Is that right, Tom?
January of 26 will be 50 full years in the
50
mortgage
years in
business.
the mortgage
Yep.
industry. So we're
Yep.
going back. It's always fun to talk to folks that have been in the industry for that long. My mentor, my first manager, was very similar to you. He just retired. I think he's 70, late or mid 70s.
Yeah.
Was at Nations Bank, then Bank of
All
America,
right.
same group for 30 something years. And then eventually at the end, he bounced around a little bit. But
Yeah.
it's fun talking to you because I hear a lot of the same things. How he ran his career, it matches up with yours. So,
Mm,
you started life out in Vermont. Tell us
yeah.
about that and how you found yourself where you are. The
First of
early.
all, you can tell by looking at me, 50 years in the business, I must have started when I was 3 or 4, right? No.
Well, you
So I
got
got
more
out of
hair
high
than most
school.
people, so your hair is still there. Most guys are bald by
Yeah,
years.
it's there, but it's
You're
white.
doing
I
good.
always say, somebody said this once and I took it up. I'd rather have it turn gray than turn loose. But
Very
anyway, yeah. So I got out of high school in 1975 in Montpelier, Vermont. And it's a funny story how I even got the first job. But when I got out of high school, at first I went to work for a large supermarket there. Well, I say large for the small town we lived in. And I was in the butcher shop part of it, learning how to cut meat. And those were the days when, you know, the truck unloaded a side of beef, on a hook and you had to break it all down. But it was not a full-time job and there were no benefits. And I did not want to go to college. The only thing I could decide to go to college for was to be a doctor. And I just couldn't see myself in 8 more years of school. So the funny part of the story is my mom, who at the time also worked at that same supermarket, kind of think she wanted to get me out of there, but she played bridge once a month with all these ladies, eight different ladies, including her. And so this one bridge club thing in, I guess it must have been December because I started in January of 76. One of the ladies in the bridge club, her husband ran the mortgage department at this large life insurance company that we had that was headquartered in Montpelier, Vermont. It's called National Life of Vermont. And back in those days, securitizing loans was not as big a deal yet as it is now. So life insurance companies would take all that premium money that they, not all, but take a bunch of that premium money and they would purchase whole loans from community banks. And so National Life of Vermont, because um, they had agency offices in all 50 states, they purchased mortgage loans and held them in their portfolio from all 50 states. And we then serviced the loans. We, did all the servicing stuff. And back then you didn't buy and sell servicing rights, you either owned it or you didn't own it. And so the lady in the bridge club one night in December, I think, said to all the other bridge club ladies, "Hey, my husband's looking for somebody to hire in the mortgage department at the life insurance company. Do you know anybody?" So the next morning, my mom, I was still living at home because I hadn't figured out how to get, in my own place on a part-time job yet. And my mom woke me up and said, "Get dressed and get your ass up the hill to the life insurance company and apply for this job." And so I did. I got dressed. I walked. The headquarters was up on the side of a big, I would call it a mountain, but anyway. Um, so applied for the job, got it, started right after the first of the year, and I learned the entire, not the origination part of things because we didn't originate loans, but servicing them, escrow, buying loans, onboarding loans, all of it. And of course, the computer systems we had back then were just huge mainframe computers. There was rooms full of computer banks. And I remember in those days, like we would get paper checks and we had, I think, about 56,000 loans that we serviced. And The interest rates at the time on the servicing portfolio were anywhere from 4.5 to 6.5, because this would have been in the uh, mid to late 70s, and it was before rates went up in the double digits. We stopped buying loans when they went up into the double digits, uh, but the mainframe computers were amazing because we'd get these paper checks for payments, and we'd have to type the payment information into this little, I don't even know what you called it, but it would spit out a IBM card that was, like 8.5 inches long and 3 inches tall with punch holes in it. And you'd put it in a tray. And at the end of the day, that tray would go downstairs and the mainframe computers would it run them through, and it would post all the payments.
Wow.
And same thing with paying escrow, like paying taxes and insurance. When you wanted a check to pay everybody's taxes, you had to do the same thing, send the card, and then the checks would magically appear in 2 days, on your desk, and you would mail them out snail mail.
So you were 18, how old? 18, 19 years old?
I was 18 going on 19, yes. Yep.
Unbelievable. So
Yeah.
1975, 18 years old, you're basically doing back office mortgage servicing,
Yep.
checking the mail, bringing in the checks,
Yep.
posting the checks, sending out checks, or sending
Yep.
out statements, doing that whole thing.
Yep. Yeah, because you would get like, for instance, paying insurance premiums. You'd pay a whole year, but we had so many loans that every day we'd have, a few hundred. And one of the ladies that, because I learned every single desk. Plus, I was the young guy. And so when the IT, well, we didn't even really have an IT department, but when the maintenance people showed up one day with these hand trucks with all these huge boxes of word processors, all these old ladies that worked, and they're all dead now, so I can say that, but that worked in the department, they looked at me and went, "We're not doing that. You figure out how to put those things together and make them work." So everybody got a word processor on their desk. Um, little side note. Speaking of that, there's a really great movie called With Honors with Brendan Fraser. I don't know if you've seen it, but anybody that might listen to this, it revolves around him being at Harvard back in those days where you only had a word processor. It's a really great movie, great story. Joe Pesci's in it too. So recommendation for that movie. But this one lady in the insurance part of the escrow thing, she was so everybody was afraid of her, not just in our department, but all over the company. That it was a huge building. There was probably 1,500 people that worked in that building. And I just made it my mission to figure out how to befriend her. And I found out at one point that she literally was up all night long every night because she was a single lady, and her elderly parents that were not well lived with her, and they'd keep her up all night long. So no wonder she was mean, you know? And so, but one of the things that she required was when all these invoices came in for the annual insurance premiums, you had to check them in, do your little thing to make the card, and then you had to clip the invoice to the return envelope with a large paper clip, and they had to be 1 inch from the left side of the paper. And if they weren't, if there was even one off in the stack when you handed them to her, she'd fling them and just throw them, and they'd go all over the place. I mean, in today's workplace, you'd A, get fired, but B, probably get sued for treating somebody the way she treated people. But anyway, we ended up being great friends because I just clued into her. But so yeah, that's what I did, learned all that. And then I was there for I guess 8 or 9 years, because I moved here in 1985 to Lubbock, Texas.
So you were
And the way that,
so
go
you were
ahead.
okay, I'm in the back office. I'm probably not making a whole lot of money. There's all these loans. Somebody's doing these loans. How did you get into the sales side?
So not until I moved to Lubbock, because
Really?
there wasn't any opportunity to be in the sales side at that company. And what happened there was by then I was on the desk dialing for dollars, if you will, because everything was pretty manual back then. It was faxes and snail mail.
Uh-huh.
And Plains National Bank, which is now Plains Capital Bank,
Uh-huh.
was at the time just a small community bank here in Lubbock. It was owned by a family here, And it was like $167 million bank or something back then. Now it's obviously billions. Everybody knows Plains Capital. Um, but the lady that I would talk to on the phone to see if they had any loans to buy, um, told me she was going to retire. And I said, really? Because I was making like $900 a month. And at the time, I had a wife. And when we moved, we had a 2.5-year-old and a brand new baby.
Wow.
Or not brand new. He was like 8 or 10 months old, but because
Uh-huh.
they were a little less than 2 years apart. But so I asked her, well, who's going to take your job? She said, well, we're interviewing for that. And I said, well, would I have a chance? And she said, I don't know. So I just, I mean, I don't know. This is the way my life works, Jimmy, but I just got the brilliant idea. I'd never been on an airplane, and I just bought a plane ticket and I flew to Lubbock, Texas, and I went to Plains National Bank and I filled out a handwritten application for the job. Um, I told them that I was only going to be in town for a few days, so they interviewed me. At the end of the interview, they said, "Yeah, there's probably no way we're going to hire you because even though you have some experience, you live, 2,200 miles away or whatever it was." So I decided at the time, I went to every single mortgage company or mortgage office here in Lubbock, and I put in an application at every one of them. And I flew back home with no job prospects. But 10 days later, I got a call from Plains National Bank saying, "Hey, are you still interested in our job? Because we can't find anybody that knows what you know already." I mean, I had 9 years of
Yeah.
experience, and even though I didn't know how to originate a loan yet, and honestly, I didn't actually get into originating loans until about 1991,
Mm.
92. Because when I went to Plains, then at first I was collections and foreclosure manager. And that was back in the days where, the loans that Plains kept on their books, which they did some, you went and knocked on people's doors if they didn't make their payment. And there's some great stories about that that I won't take up our time on. But so went to work with them. I did the
So the
collection and
job you applied
foreclosure.
for was it a sales job or was it a collect this was it this job, this
No,
collection?
it was the lady retiring. It was her
Got it.
job of selling loans, and she did a lot of other things too.
Got it.
But when I got there, they were like, "Oh, young guy, we can use
Yeah.
you in this area too." So I did the loan sales at that point, and I also did the collections and foreclosure. And I was there, um, let's see, from 85 until like 91. And in 90, oh no, I was there from 85 to 88. And um, Alan White, who is the mastermind behind building Plains Capital into what it is today, he got together a little group of people and they bought Plains National Bank from the local family that owned it.
Okay.
And when they did, he closed the mortgage department. And so, because he wanted to concentrate on growing the bank. And so from that he had been at Lubbock National Bank. And so we just kind of switched companies when they closed the mortgage department. He helped me get a job in the mortgage department at Lubbock National, and they had a servicing portfolio there too. So from 88 to 91, I was there. And then Plains wanted to open up a mortgage department again. And they recruited me to come back there. And I was there from 91 until 2006.
Wow.
And the progression there was we they reopened the mortgage department. We did, I don't know, we were total department, we were probably closing $5 or $6 million a month is all. And uh that's when I got into originating.
And
And
were you managing at that point or were you just originator?
I was just an originator. And I had never actually originated a loan up to that point, and I sort of got thrown in the deep end of the pool.
Did you,
Um,
hey, when you take your wife and your kids from Vermont to Lubbock, Texas, what is the cultural shock? Like, what is your wife
uh,
thinking at home?
it was huge. It was huge because, for one thing, just the climate and the terrain was so different. Now, I knew we knew a couple of people, a couple of different families that lived here in Lubbock, through a church that we belonged to. And those two families, the husbands were preachers that traveled around. So they had been to our church up in Vermont. So we knew them casually. So that helped a little because they
Yeah.
connected us with people. But it was a culture shock. My wife, who now is my ex-wife, but she had lived part of her life in Arizona.
Okay.
So the terrain and the heat and all that
Yeah.
was not a big deal for her. The kids, it wasn't a big deal because Kate, who is my daughter, who's in the mortgage business um, in Austin, she was 2.5, so she doesn't really remember living in Vermont. David, who had been in the mortgage business, now he's a realtor. He was a 8 or 10 month old baby, and then our other three were born here. So for them, Lubbock was home.
Yeah.
For me, it was a big culture shock.
Yeah.
And
Did
you
you buy
know,
a pair of cowboy boots? Did you have to buy a pair? How long did it
so
take?
that's a great story too. Can you tell it, the
What?
storyteller?
How many years did you live down there before you bought your first like cowboy boots and cowboy hat? I mean, you have to, you're in the mortgage business.
I do not own a cowboy hat, but and never have.
Wow.
But the cowboy boots, it was at least 10 years. And the reason I bought them was because I was going to a networking event and the theme was cowboys and cowgirls. And I had to get boots. I borrowed a cowboy hat from a friend.
Oh, that's
Um,
great.
but yeah, here's the story about that though. I have three sisters, all still living, and two brothers. And I was the only one at that time who had ever moved away from Vermont. And my sisters, especially, were madder than heck at me because, we were a pretty close-knit family. And I remember my oldest sister saying, is the last visit that I had with her before I left, she said, "You better not come back here wearing cowboy boots and having a West Texas accent, or I'm going to disown you." So I held off on the cowboy boots for as long as I could.
Oh, that's so great. All right, so you get your first sales job. You're a loan originator, kind of at the bottom, like everybody kind of starts, and you're 27, 28 years old. How old do you think you are?
Yeah,
30?
that would have been 91. So yeah, probably no 91, 57, 67, 77, 80. No, I was right at 30, pretty close to
30 years
30.
old.
Yeah.
How did you get business back then? So
Well,
you walk into you meet your manager, he's like, all right, Tom, we need you to go do this to get
oh,
business.
and listen, and he was a scrappy guy. He was a West Texas guy. He always had a curved pipe hanging out of his mouth, never lit in the office, but always hanging out of his mouth. And he talked with a gravelly voice, and his name was Roddy Stargell. And God rest his soul, he's passed away too. But call every guy Pard, P-A-R-D, short for partner. So he'd say, so I walked in, he goes, "Well, Pard, you got to get out there and get loans." And but here's the thing, I got really lucky because 92 and 93 was kind of a mini refi boom because coming off of the 80s with the 10 and 12% interest rates. And then when you got into middle of like end of 91 through 92 and 93, rates had come down to like 7 or 8%. So it was like fishing in a barrel, shooting fish in a barrel. So I got super lucky. I did not have to really grind because people were calling once I passed out cards for sure, but people would call and want to do a refi.
So it was a lot
How
of
I got in.
it was a lot of internal like bank customers reaching out to you guys and you're just
So
fine.
it wasn't really because they didn't have a big servicing portfolio and the bank was still kind of small at that
Uh-huh.
point. And there were some bank customers that, inquired with their commercial loan officer about a mortgage refi. It was more people that just I don't even know how to explain it. People that I'd come to know over the 6 years or so that I've been here,
Yeah.
and then they'd tell their friends and whatnot. And like I said, I did pass out cards. That's what we had. You didn't have the internet back then. So you did the old-fashioned thing, passing out cards. And I've since morphed into I had to pack them because we're changing offices tomorrow, but where I buy really nice, not really nice, like pens that cost
Yeah.
anywhere from 89 cents a piece to $1.29 a piece. And those are my business cards now, and I leave them at restaurants and give them to wait staff people. Good idea for anybody that might listen to this. Because if you ever talk to a wait staff person, you'll know that they're one of their biggest gripes is that people steal their pens. And I got this idea, well, if people steal the pens and I'm giving free pens to wait staff, they're
Steal
gonna, yeah, they're gonna see my name and my info on that pen. And
they steal your pen,
I
right?
get calls from people after they've stolen my pens. And honestly, they're decent pens. They're not just, plastic weirdo pens. They're so anyway, yeah, it's a little bit of a investment, but you get one loan out of 1,000 pens and you've way more than paid for
Right,
those 1,000 pens.
right. So
So
how
yeah,
long do you remember your first loan? Or your first couple loans, or like early in your career? Was there a
I,
mistake made, or like
well, as
any?
far as refis, yes, because I didn't know what I was doing. And
Uh,
I couldn't, at the beginning, I couldn't figure out the nuances difference between a FHA loan and a conventional loan. So what I remember about that part of it was, um, just feeling so out of my element that I thought I was gonna screw it up and disappoint people. Because, uh, the other part of the story that I didn't tell you was the guy who actually hired me back at Plains was not Roddy, it was his boss, and his boss was somebody I knew well, and he knew me, and we're still friends to this day. Um, and Roddy was a little bit bent out of shape over me getting hired, so he wasn't willing to help me. So we had a software back then called Mortgageware, and they wouldn't even show me how to use it. I had to sit there, and there was one lady in the department that was nice enough to help me a little bit. Um, and then as far as purchase loans, what I remember when I started really getting into the purchase loan business was um, my MO has always been this is about the people, not about the product. You have to know the product. You have to be able to sell the product. You have to be able to, and as I said, I learned it the hard way. So you have to be able to know what's best for your client, or in my case, now that I'm at a credit union, your member. Um, but uh, but it's more about the people. They're going through a huge thing that they may feel totally inept at and not know how to do. And so that said, what I remember about those first few loans was actually after they were closed, and I would run into these people in town because back then Lubbock was probably about 175,000 people. And so you run into people that you did loans for, and I still do. And I've done so many loans over these um, how many years? 40 years now here in Lubbock, I guess. Um, and I've done so many loans that I have a hard time remembering if I run into somebody and they know me.
yeah,
Well, back then it was more the uh, the pleasure or the feeling a sense of reward that you help somebody do something that was way outside of their bailiwick, but also help them achieve their dream of buying that home.
yep.
So that's what I remember. As far as the mechanics of it, I mean, dude, this software we had was just in its infancy, so you still had to, do a paper application and then input certain data. It wouldn't print out a full 1003. You had to do that on paper or on a back in those days we had and some people that watch this probably old enough to remember and others are not, but we had it wasn't even carbon paper by then. Carbon paper was, that black sheet of paper between two sheets of paper, and but it was called NCR paper. And there was a tab across the top, and there was 5 pages that were attached to that tab. There was white, pink, green, goldenrod, and I forgot the fifth one. But anyway, so when you stuck it in a typewriter, you're typing on the white page and it magically went through to the other pages. And then you'd rip it off from that tab at the top and they'd sign and you'd give them a copy from one of them and you keep the other copies to send to whoever's buying the loan. And yeah, it was a whole different world than today.
So every app was face to face, right?
Every app was face to face. Yeah.
And
Yeah.
you collected pay stubs back then and take tax returns? Same stuff,
Yes.
W-2,
Yes.
all the same stuff, bank statement stuff.
Yep, all of it, and it wasn't as onerous as it is today with all the fraud
Hmm.
reports that you have to pull today, and the um, underwriting. There wasn't AUS back then, so underwriting was more of a make sense of this from a standpoint of seeing the person, not just the data,
Yeah.
and so I mean, I remember one time an underwriter that shall remain unnamed, and this is a little bit horrible. You may want to edit it out, but I had this couple, and it was a man and a woman, but they weren't married and they were living together. And this would have been maybe 94, 95. And and they were stellar, didn't have credit scores back then, but their credit history was great. They had plenty of money. Their debt to income ratios were low. And back then you lived by 28 and 36. You couldn't do a loan outside of those debt to income ratios. Um, and and at the bottom of the underwriting sheet, which the clients never got to see, obviously, she approved the loan. This underwriter approved the loan, and she wrote a note: "These people don't deserve a home because they're living in sin." Can you imagine? I mean, even daring to say something or write something like that today would be like ridiculous.
Oh
And
my.
I think it should have been ridiculous back then, but
Yeah.
it wasn't. It was acceptable back then.
So,
So,
so you made a point earlier where you said, you ran around, you'd get a loan, you ran around, you had no idea what the difference between a conventional FHA was. And I did the same thing. I was 25 years old when I started in the mortgage business. I knew nothing. And I would just go from office to office to ask someone new because I was embarrassed to ask the same person over and over again. I didn't know what I'm doing. So I would just
yeah,
pop in did you do that? Did you sit out of
right.
someone's office and listen to them talk? Like was there anybody that kind of helped you like
Oh,
consistent
yeah.
along the
Yeah,
way?
in the beginning, when I transitioned from the servicing side of things over to originating, yeah, there was this one lady. Her name was Tiana, and she's retired now, but still lives here, and we're still friends. Um, she was willing to. Well, that's another little cute story, funny story, because when I was first there at Plains, she wasn't working at Plains. She was at some what we would now call independent mortgage bank. Um, but she did this ad hoc teaching at the university, Texas Tech University, and she'd heard about me somehow, and I was taking the class. And it was a full-fledged banking class, but she did some of the mortgage modules in it. So she had heard about me, and this is the beginning of our friendship. She asked me in the class to stand up and answer a question that she knew I wouldn't have any way to know the answer to, and she embarrassed me. And to this day, we laugh about it. But she then answered the question. But then fast forward to 91 or so when I went back to Plains, by then she was working there instead of the independent mortgage bank. And so she took me under her wing on the origination side of things and helped me figure it out. And so I didn't have to bounce from one person to the
Mhm.
next because she was willing. Yeah.
Do you
And
find good?
not to toot my own horn here, but I picked it up really fast because I knew the back side of things,
Mhm.
and if somebody wants to get in the mortgage business now, and in a few minutes we can talk about that, but my recommendation is if you can at all handle it financially, learn the backside of the mortgage
Yeah.
loan department first.
Yeah. You were flipping French fries and putting cheese on the burgers and you knew how everything
Bingo.
operated, which is
Yep.
huge. It totally
Yep.
to start at the end because there's so many pieces of even today
Yep.
with things have changed so much, it's still very complicated. The learning curve is several years, I think, to
Yep.
learn at
Yep.
least the ins and outs. So you're doing. I always like to talk about the money side of things. Did
Yeah.
you go home and talk to your wife and say, "Honey, I just made more this month than I made in all of last year"? Did you ever have that conversation early, or was
Yep.
it always kind of a struggle? You're early in your career.
Oh no, not till years later, because that very first year that I moved into originating at Plains, I closed 24, $25 million that year. And again, had a little help because there were some refis,
That
but
seems good. That seems very good.
well, this was 1991 or two. And so yeah, $25
A
million
lot of
was a
units.
lot.
That's got
Yeah.
to be a lot of units.
Yeah. Oh, I don't remember how many units it was, but I would have to say it was, I don't know. I don't remember what our average loan amount was, but um, I mean, right now in Lubbock, Texas, the average loan amount is 250.
Yeah,
So if it was 150, I
yeah.
mean,
A lot of
that
talking
would,
a lot.
it had to have been like close to 200, like 175 or so.
All right, so you
And by the way, I had to process it myself too, because Roddy wouldn't give me a processor.
so you
I
had
had a underwriter and closer, but um, after that first year, Roddy was like, "Oh, okay, you can have a
uh,
processor because you're actually close." But back to the money, the bank only paid a salary. They
uh,
would not pay commission. And I went back to him. I was making $2,000 a month, which, you know, 6 years, no, that was 91. So yeah, 6 or 7 years earlier, at the end of my career in Vermont, I was only making 900. So 2,000 a month seemed like wealthy,
uh,
but, and by then we had two more kids because
uh,
we had one in 1987 and one in 1989. So now we had four kids, and my wife didn't work because daycare would have been way too expensive.
right.
So believe me, we didn't save a lot of money in our early years, but I went to all the way to the to Alan White, the owner of the bank, and I said, "Look, here's the math on what I've just made you because I know the premium that
Yeah.
you're selling these loans for, and you paid me $24,000, and I want a share of this." And he flat out said no. And the reason he said no was because they had two or three other originators there, and he'd have to do it for everybody. So no, I didn't. The after so in I don't know, 94, I guess maybe. Um, I got recruited by an independent mortgage bank or here. It was called McAfee Mortgage. And they needed a lock desk person. We weren't doing hedging back then. And and of course I'd done some of that at Plains, as far as locking loans and that sort of thing. So I took a job over there and left Plains temporarily. There's more to that story. Um, because they were willing to pay me a little bit more. I can't remember the exact amount, but a little bit more salary. Plus, we had a deal where we had a baseline revenue that I had to make selling loans, and anything above that, I got 10% of the extra. So I was like, I was in heaven.
Yeah.
That was when I was like, oh, damn, I'm making more money in maybe in 2 months than I made
Yeah.
all last year.
Yeah.
But then 1996 rolled around, and the people that owned McAfee Mortgage wanted to sell it because two of the owners, there was a married couple that owned a third, and two other guys that each owned a third. And the two other guys were silent partners. They didn't have anything to do with running the business, and they wanted out. They wanted to cash in their chips. So they sold McAfee Mortgage to Plains National Bank. So
Man.
now I'm back, and I'll be
Oh,
honest with you, this is a
that's so
great
great.
choice. Yeah, but Alan didn't want me because he was offended that I left two years earlier. And so he told them, I'll buy your mortgage company and gosh, it was that mortgage company was doing 300 million a year
Yeah.
at that time. And they sold it for, I guess, 100 basis points or something because they sold it for 3 million bucks. And uh which today that would probably go for more, but he said, I'm only writing the check if you fire Tom. Because he left me once. I'm not taking that risk again. And they said, well, then you can keep your check because Tom's a very important part of our company and we're not going to fire him. And so he acquiesced, bought the company, and now I'm back working for Plains, and I got all my tenure, including that 2 years or whatever it was. So I really was at Plains slash McAfee from 91 to 2006. And
Wow.
in 2006, in 99, Plains bought Prime Lending. And at the time, Prime Lending was a 10-year-old company that um, was um, owned, just a private ownership. Rosanna McGill was the lady that started it and owned it. And she sold it to Plains Capital, and we ran as separate subsidiary companies from 99 to '06, and then merged the two. So it became Prime Lending, a Plains
Oh,
Capital
no.
company.
And
Yeah.
so up to 2006, you were just a loan officer. You weren't managing. Is that right?
No, at McAfee, I worked my way up through to managing and actually running the company by the time.
Really?
Um, so yeah, I started out in that 94 range, whenever it was, over at McAfee doing lock desk. And I did that for several years. I want to say to 99 or so, maybe. And then we started doing some hedging and whatnot back
Yeah.
then with Tuttle and Company. And so I was overseeing all that. And I became kind of a regional guy. So I didn't really originate loans for a long chunk of time
Oh,
during that tenure. And then uh, our president, who was one of the husband of the married couple that owned the company, he left and went because he was an entrepreneurial guy and he didn't want to have somebody else be his boss anymore. So then our vice president moved up to president, and I moved up to vice president. And then when he retired, I moved up to president. And the bank owned us, so they're big on titles at banks. So they called
yeah.
me president and CEO. But by then we had, um, gosh, the numbers leave me, but I'm going to say just under 50 branches all throughout the
Really?
Southwest.
And you
Yeah.
managed 50.
Yeah, I had some regional guys under me, but I managed all. We had about 400 employees.
Wow. So what when you're recruiting, like if you're recruiting a team or you're recruiting a leader or a loan officer, and there's so much of that that goes on now. I mean, it's so much recruiting and guys going here and girls going, people going in and out.
Yep.
Um, like what do you look for? What is like the one or two things that you feel like makes from a if you're going to be a branch manager successful?
Yeah. Well, I look for people that are relational, not transactional. Anybody can learn to do the transaction. Not everybody can learn to be relational with people. And I fully believe my coach, Roland Cochran is his name, and he did teaching one time at one of our group coaching weekends. I coach one-on-one with him, but we have group things 3 times a year. And he did this whole teaching on the different drivers of American economies during different segments of time. And like, for instance, 1900 and 1950 was kind of an industrial economy. Things were being invented and manufactured and all that. And then come 1950, 51-ish, you had to connect people with all these new innovative things. And that 50 to whenever 90 something was kind of driven by connection, not relational connection, but connecting people with products. Like I remember a commercial on TV for Dow, the Dow company, and the commercial said, Dow Chemicals, a better life through plastic. Weird, but but the end of his teaching, I won't go through all of it, but the end of his teaching was that the belief is that now we are in a purpose-driven economy, and that younger people like you, thank you again for being on my panel at the Texas Mortgage Bankers, but we talked a lot about the fact that Gen X and the millennials and the what's the most
Gen
recent
X, Gen
one?
Z, and then
Gen Z,
yeah,
that they really are driven by, because they were raised this way, by purpose. And people, so I believe, and I always have, that the better way to recruit is to find people that are able to connect with people. We just brought a branch on here at the Texas Tech Credit Union, and it's 100 miles from here. Um, and the whole reason we did was because people here knew those people, and knew that we weren't looking to build a market in a certain place. We always look for people, and I always have looked for people that have built rapport, because if you're going to do business with somebody, you want to know that you can trust them, and you want to know that you can learn to like them at least through the transaction, and that they're going to have your back. And for me, the second part of that is that breeds longevity of that business relationship, that they're going to tell their friends and neighbors, they're going to tell the people they go to church with, they're going to actually tell their kids. Well, actually, I'm not really doing a lot of loans anymore because I'm doing a lot of coaching and mentoring. But currently, and for the last several years, I've done a lot of loans for the kids of people I did loans for back then. And I actually did one recently for our grandkid. So
Tells you a lot. You're exactly right. The tough thing about the mortgage business is you get paid one time and there is no
yeah,
residual. But the residuals is the relationships when
yep,
refinances come along and the kids come along. You can definitely, if you do a good job on the front end, you can see
yep,
that over time build
yep.
build for
And
you.
not just with the client, Jimmy, also with the referral partner.
Mhm.
If I had one piece of advice to give to anybody about referral partner relationships, is be their friend. They don't want referral partners, realtors, builders, whoever, CPAs, all of it. They don't want to always have you be going, gimme, 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 because that makes them feel used. And yes, they need you if it's a transaction that needs a loan, but they also have a lot of other people that could provide that same product. Maybe a little bit different pricing, but could
Yeah.
provide. So be their friend. I mean, I have referral partners that I know all their kids and grandkids, not that I hang out with them every day, all day, but I made it a point to get to know them because that breeds trust.
Yeah.
And then when the transactions go smoothly, now don't get me wrong, if you totally blow up the transaction, the friendship is probably going to suffer, right? Um, but when the friendship is there and you can do the transaction, that's gold,
Yeah. Yeah.
because you're helping them manage their lifestyle by getting a paycheck at the closing too, and they know that they can count on you.
Yeah. So you've been at Texas Tech Credit Union for 13 years, right? 13,
Yeah,
14 years.
going on 14 since 2011.
So you go from Plains Capital, which is a pretty big, I mean, as it grew, I'm sure it just kept getting bigger and bigger.
Yeah.
What, like, were you hesitant to get into the credit union side? What did you like about it? What were you hesitant about? What was, what is something that you feel like is a misconception about mortgage on the credit union side that you
Okay,
felt?
so I did a short stint after Plains Capital at a regional community bank here. Um, and then I came over. The credit union didn't have a mortgage department. In 2011, we started it, me and one other guy. Um, and from scratch, like getting all the approvals to, with the agencies and investor relationships and all the way down to vendors. And they were referring their members out to a CUSO, which I don't know if everybody knows what that is, but it's a credit union service organization. So a CUSO is a company that serves maybe one or several credit unions in an area that they don't have the internal capacity to do. Um, at the bank, at banks, sometimes there's a bit of a disconnect between the commercial side of the bank and the mortgage side of the bank for whatever reason. The biggest thing that I found here at the credit unions, there's no disconnect there at all. Because credit unions are member centric. So for anybody that doesn't know, no individual can own a credit union. The members of the credit union are the owners. There's no stockholders. If you fit the field of membership, you are a minute owner of the credit union. And credit unions can never be sold. They can merge together. That's allowed by NCUA. And in fact, we've grown a little bit by merging two or three different small credit unions into ours. But so the the positive thing that people wouldn't know is that the culture at a credit union is so much different because your quote owners walk in the door every single day. And they're the people you have to serve, get to serve, and attempt to keep happy. So that's a positive thing. The culture is amazing. The thing that the bad rap that they get is that we're tax exempt and we're a nonprofit. Well, credit unions are really meaning saying that they're a nonprofit does not mean that we don't make a profit. We make a profit, but we don't use that profit to go out and buy other things or to line the pockets of any individual person. We use that profit to put it back into benefits of the members. So lower interest rates on mortgages and consumer loans, a little bit higher interest rates on deposit accounts. So other people, especially competitors, they get a little bit spicy over the fact that we reinvest our profits into being able to have a better priced product for our members. And we're blessed here because anybody can become a member of Texas Tech Credit Union through becoming a member of the Alumni Association. So if you're not a graduate of Tech or a faculty or staff member, uh, or we also, our field of membership is local school districts around the 100-mile radius or so. If you're not a member or have anything to do with any of that, then you can just join the Alumni Association, and the Alumni Association of any college is willing to let people join and be, rah-rah and get their money.
Yeah.
So I don't know if that answered your question or not, because I got
Yeah.
off on a tangent there, but
Yeah, definitely. And so you're in your 13th, 14th year there. You've got four kids. Two of them are in the mortgage. Three, all of
five now. Yeah. No, no. One of my kids has never been in mortgage. All the other four have. My daughter is the credit risk, VP of credit risk for a mortgage company in Austin. My oldest son, now he and his wife are realtors, and they just recently moved to Alabama, where
Okay.
they're doing real estate business, but they were here. He was in the mortgage business for a while, and so was she. Not she was there just because, not because she anything to do with me. Then my middle son lives in Austin. He is pastor of a very small church there that he started, but also works a full-time job at a mortgage company in Austin. And then my next son used to be here at the credit union. He and his wife moved to Colorado, and he is at a credit union there. But honestly, he's moved from the mortgage side over to, he's heading up one of the areas of the consumer lending side now. And then my youngest son is a musician and has never been in the mortgage
Oh,
business. He swore from the time he was born. But my first four are like 2 or a little under 2 years apart. And then there's a 5-year gap.
okay.
And so he had the luxury of like sitting back and watching. And he was like, no, not doing this, Dad.
Good
So,
direction. So,
yeah.
all right. So you get it. As we kind of wrap here, you have, let's say you hire you got a new loan officer. He or she is young, out of college. What is the first thing you have them do? Do you want them originating? Do you want them sitting with people? Like if you're getting into the business as a young person, what
Yeah.
kind of advice would you want them?
We buy them a course from a company called Zinix
Okay.
that is a loan origination course. And the first thing we make them do is spend however long it takes, 2-3 weeks, all day long, doing that course, and they have to pass the course. We just did it recently with a guy. He was actually one of our consumer lenders, and he wanted to move over, and he knew nothing about mortgage yet. He's done really, really well with it. And then here at our credit union, we have a real team nature. And so myself mentoring him, because now I'm, leader, mentor, whatever, mostly. And then pretty much buddy him up with one of our loan officers that's seasoned to ask if I'm not available, he can ask questions of her. If she's not available, he can ask questions of me. And then like today, because one of the bigger parts there is don't let a new loan officer loose with referral partners because they don't know what they don't know yet. And you don't want to tell a referral partner something that isn't accurate, right? So like today, after this, I'm going to lunch with he and a referral partner that he's building a rapport with. And I'll let him handle the conversation, but I'll be there to interject if
Yeah,
something needs to, you know. So that's the two or three things. It's get him a course.
yeah,
It's worth the investment if you know that this is going to be a long-term employee. Buddy him up with a manager and a seasoned loan officer, and then hang with them and be there for them. Like my beginnings with Roddy Stargell, um, if at first before Tiana was there, I was drowning. I needed to be buddied up with somebody. Even though at that point had 7 years or 8, whatever it was in the mortgage business already, I didn't know what I didn't know about creating a loan that's best for the client,
yeah.
you know,
It's
because it
interesting
is, you have to know.
how those early years in the career, no matter when it was, can shape how you lead in the future and like what your experience
Absolutely.
like. You don't want anybody to go through that because it's very challenging
Yeah.
and it's 100% commission once you get to that point and it
Yep.
can be overwhelming. So
Yeah.
I do like that you definitely take a role. And then the other thing that it seems like you've mentioned a couple of times is coaching. When did you start getting into coaching and why?
Well, I started being coached. I had gotten to like a glass ceiling, if you will, and I couldn't get past it in production. And so I started coaching. I vetted a bunch of different coaches, but a lady in California named Cindy Ertman, I highly recommend Cindy Ertman, Ertman. And she has still a program where she takes just 12 or 15 people at a time and goes through a whole year with them. And you have 2 times during the year that you actually are in California altogether, and the rest of it's on Zoom. And her coaching is, I would say, 50% tactical and 50% heart-centered. So it was a great um, fit for me because of my relational thing. I mean, honestly, Jimmy, you know, my strength is not tactical stuff. My strength is people. I love people. My current coach asked me one day recently, I just tell him about a great day that I had. And he said, "Why was it a great day?" And I said, "This, because I did people all day long. That's all I did all day." And by the end of that day, I'm energized by being with people, talking to people. And we don't just talk about mortgages. But so I started out with Cindy, and I think not until 2017. Um, and did that whole year worth of thing. Now I actually coach for her.
Mhm.
She refers clients, she has a group of us that do coaching because there's only one Cindy. Um, and then I got with Roland about 4 years ago, and he's more of a life coach, maybe, I guess. And that's helped me a lot because it's helped me come to realize that, we're all hard on ourselves.
Mhm.
And we talk to ourselves in a way that we would never talk to somebody else. And that's just wrong.
Mhm.
It holds you back. And so I've learned that growing my business at least has more to do with growing me personally so I can care about people more. Yes, you do have to learn all the details. And like if I didn't know how to answer questions about mortgage guidelines, I wouldn't be a good producer of any kind. So yes, that's so important. But I said this quote, I think, at our panel that we were on at TMBA, but I love it, Simon Sinek. And he says, um, uh, you have to remember that 100% of your coworkers or employees are people. 100% of your referral partners are people. 100% of your clients are people. I don't care if you have the best process and the best product in the world. If you don't understand people, you don't understand business. That's a verbatim quote. And I love that quote because that is where, if you're going to get in this business, you got to remember it's a people business. And sure, there's online companies that do the transactions, but so many people won't go back the second time to that company because there wasn't any good way for them to feel cared for.
Yeah.
And if you're uh, if your business is more, even if it is online and you're doing what we're doing on a Zoom call. I do Zoom calls or have done Zoom calls with people since the pandemic and sit there for 30 minutes talking about who they are and what they want
Right.
and what their life is like. And that's what's important.
Now,
So
it is true you can get face to face without getting face to face now, but
yeah,
I do think it's very important to, in the mortgage business, to somehow see the other person if you can,
yep,
whether it's online. There's
yep,
so many easy ways to get people to look at you in the eyes. They don't have to
yep,
leave your branch anymore.
nope,
Sure. So, well, Tom, you've shared some awesome insights. You got 50 years. We covered it here pretty quick. And I really appreciate you sharing your what you've learned over your career. Your coaching, I think coaching is something that more people could do, especially as they get into leadership roles.
yep.
Um, probably caring teaches you to care a little bit more about others, for sure. So thanks for your time, Tom,
Well,
and
thank
sharing your
you.
story.
It's my honor, honestly, Jimmy. I have the greatest level of respect for you and what you do in your company. And as you know, we use your product and we love it. And so thank you for I appreciate the fact that we've started a friendship over the last year or so, and it means a lot. And hope you're getting a little bit of sleep with that new baby.
Yes, you got it. We'll talk soon.
All right, take care.